Perfect. Well, ladies, because there's no guys in here. So ladies, I wanted to show to you, first of all, what should be our final product, what you're gonna learn. Everything has been theoretical until here. I just want to show you what we want to achieve. Maybe not the same format. The format is a little bit more towards professional delivery, but the same elements, yes, for sure. The format is something that you have to, like, I don't know, you have to devote some time to it, like a presentation in PowerPoint. If you want to make it more beautiful, you devote more time, right? So that's not important, but these elements, yes, they are very, very important. Can you tell me what are we seeing, Abigail or you, Belen?
Seeing where? I'm sorry, I cannot see the presentation or.
I'm sharing screen in the Zoom.
Oh, I'm not able to see it. I'm sorry.
Are you seeing it, Abigail?
No, I'm not seeing anything.
Let me do it again. Let me see. Can you confirm if you can see it?
Not yet.
Not yet. It's just, it says Enrique has started screen share. That's it.
Okay, okay. Give it a second. Yes, I think it was a little bit freezed. That's why you couldn't see it. Just give it some seconds. Can you see it now?
Yes, yes, I'm able to see it now. The like a Excel.
Yes, it's an Excel.
Yes.
Okay. So this is what we're gonna learn. This is the final product of what you will learn. Can you tell me what is this?
An income statement.
Yes, perfect. Very good, Abigail. This is an income statement. And remember, guys, don't learn the names. Learn the purpose, the meaning, because you will find that people tends to change the name. Another way to know the income statement is a profit and loss. They also call it P&L, P and L, okay? Because it's profit and loss statement. In here, what are the elements of the P&L? What would you see in a P&L, in a profit and loss statement?
The assets.
No. You will have...
The profits.
Yes, exactly, the profits. But how do you get to a profit? You will have the income, the revenue, right? You will have the costs, and you will have the expenses. These are expenses. And you get to a final profit. We will see all the elements, but let's go with the basics, okay? This is the final result of what you are doing, of what we were doing the last week. The next thing is a balance sheet. What is the balance sheet, guys? Ladies.
It's a sheet that evaluates assets.
Not only assets. Yes, you can evaluate assets.
Money.
Take a look in here. You have assets, liabilities, and equity, okay? Remember this nature of accounts? Are you watching the table?
Yes.
Remember, this is the most important table of the whole semester. You have to figure out, you have to know it. If you don't understand it, learn it. It's very, very short. Come on. It will take you 10 minutes to memorize it. So now you know that the assets, the liability, and the equity are part of the balance sheet, and the revenue and the expense, those are part of the income statement. Okay. This is a summarized view of a balance sheet and an income statement. A very short view, but enough for you to understand the basics. Just wait a second, guys, because Emiliano is entering to the class. Oh no, now everyone has arrived. Hello, hello, Abigail. Hello, hello. Emiliano. First time in here, no, Emiliano?
Yes,
Welcome. Nice to meet you.
nice to meet you.
Yes.
Okay, give me 1 second. Jessica and David are entering also. What happened to you guys?
We thought that the class was here in the classroom. We're all here. We were waiting.
I thought about it. I thought, did my students remember that it was on Zoom? Sorry, guys. Sorry about that. I told you it's a matter of me. I need some flexibility. Otherwise, I couldn't be giving classes. Actually, I'm traveling this Thursday. I finish your class and I go on a trip.
Where are you
So
going?
that's the main reason. To El Cuyo. Do you know El Cuyo? El Cuyo is on Yucatan. I need to see some real estate and have a little bit of rest in the process. Very beautiful, like Bacalar. No, more like Holbox. Okay, guys, so welcome to everyone. I was showing, oh, wait, we have a new person in here. Well, we have Emiliano and Alexis. Hello, Alexis. Welcome.
Voy así por la escuela.
Guys, if you're able to turn on your cameras, I would appreciate it a lot.
There's a problem, mister.
There's only one computer and one camera.
Yeah, that's what
Hello.
Hello, Alexis.
hear you like. ¿Por qué? Ah, profe, ¿lo podemos conectar al proyector de la clase?
Yes, of course.
Dale. ¿Sí?
Yes, but guys, I don't know if you will be able to speak because the microphone is far away from you.
Entonces, lo que hacemos si quiere es que lo proyectamos en una.
Exactly. And in another one, speak. Yes, I will do that. Nice.
Denos un minutito, solo que conectamos. A ver, no me para tu cara, te veo aquí, te estás comiendo. Give us a minute, okay?
Yes, of course. Where were you, Belen? What is your background?
Oh, I'm in the mesitas, so I can eat
Oh,
because I
yes.
cannot eat inside, and I cannot bring my food to the cafeteria, so I'm outside in the.
No, don't worry. Nice.
People are passing by, so that's
I
why.
thought it was a background.
No, I'm actually here sitting.
Very nice. Alexis, welcome. Have we met?
Hi, thank you.
You're new, right?
Yes, it's my first day
Perfect, Alexis. Where are you from?
from Cancun.
Perfect. Perfect.
Yep.
Is it your first semester?
Yeah, my first semester. Yeah.
Welcome,
Thank
Alexis.
you.
Emiliano, Alexis, we have a particularity in this class. We do it Tuesdays online, Thursdays on the campus. Okay.
Okay.
It's because I need some flexibility. I'm not full-time professor.
So is the
So,
semester
and
gonna be the whole semester like that?
yes.
Okay.
It will be one time online, Tuesdays online at this same link. And actually the course is meant to be that way, huh? It's prepared.
Okay.
You have all the content of the course already videotaped, recorded, and available for you. And I video record these sessions, upload them to YouTube, so you can see the video recording, and you will have it always available in my YouTube channel. Okay. If you want to study, if you want to remember some aspects of your class, you just go to the YouTube video and that's it. Okay.
Excellent.
Perfect, guys. So, Abigail, are you ready? Are you okay, everyone? On that side? Ernesto, we were missing Ernesto.
We don't have the. Oh. No, nos fuimos por un cable HDMI para poder proyectarlo.
Yes, I missed that HDMI since last class, remember?
Yes.
Don't worry, guys, don't worry. Just for your knowledge, Alexis, please, when we do live sessions as this one, try to have a camera. Don't make me speak to black screens with names. Okay. Oh, nice. And you're together. Perfect. So welcome, guys. Thank you very much for being here. Remember, the next class is on campus. Don't forget about it. We will start. This is financial accounting, guys. Well, it's finance direction. Okay. What do you think it involves, finance direction, guys? Because I was showing it to your classmates. Let me share it to you. I will show you the final product of what you will learn. Okay, this is the final product. Obviously, baby steps. We have to begin with the basics. But what is this, guys? What is this? What I'm showing right now?
A spreadsheet.
A spreadsheet, an Excel. No, come on, guys. This is a financial statement. What's the name of that financial statement?
Income statement.
Income statement. And what are the elements of an income statement? Who can tell me what is an income statement? First
An
of
income
all,
statement, I believe, was the income statement is a financial statement or financial report reporting income and expenditure, as well as profits and losses of a given period.
Yes, that's the proper accounting definition. What does it tell you? What is an income? Tell me the
Revenue,
definition of
profit.
an income. In companies, what is income, guys?
The money that enters.
Assets.
The entrance of money.
It's not assets.
Damn it.
And the money that enters.
Or the
No,
resources.
no, it's not the money that enters, because like we saw the previous class, you can have credit sales. It doesn't involve any money entering, but you are selling. Right? So let's define it properly. What do you say, guys? What are sales in companies? Apple, what does it sell?
Cell phones, well, technology, equipment, experiences.
Experiences. What is the main product of Apple, guys?
iPhones, I guess.
iPhones. Okay, perfect. iPhones. So how can we say, is that a sale for Apple? How can you define it?
Let's say product.
Is the source of
An
benefits, no? Is the source of the benefits of a company. If you provide a service or a product, that's the benefit that you will receive from an economic perspective, right? And what are costs, guys? What are the costs? Anybody? What is a cost? A cost or an expense? You don't remember,
Could you
guys?
please repeat the question?
What is a cost or an expense?
Loss of profit or income.
Please repeat.
A loss of income.
It's not that much the loss of income is what it's what you have to deduct from the income, which is implying that, for example, what is the cost of the iPhone, guys? You sell it for $1,000. What is the cost of an iPhone?
You mean the cost of making an iPhone?
Of course, manufacturing cost.
Ah, okay, so well, I don't think it surpasses the $200.
It's an example. It's an example, David. What I need you to understand is the concept, okay? Because income and cost are part of your profit and loss statement. You have in here something that's it's called income or gross booking in this case. You have the costs and you have a net revenue. That net revenue, it's called what? Gross margin. This is, can anybody translate this percentage to me? What are we seeing in this 10%? What does that 10% mean?
The net revenue.
It's not the not the net revenue, but close enough. It's called gross margin. The net revenue is after the expenses are deducted. Okay? After the expenses are deducted and also obviously the taxes, you will have the net revenue or the net income. But then you do know what is a profit and loss statement, guys. Very nice. So this is what we learn how to do it, But the important part in here is not how to do the statement, but analyze it. How is an investor going to analyze an income statement in order to define if it's okay to invest? Or you will have proper strategies or conclusions from this analysis from a directive or executive perspective. You will be, after you graduate, for sure, you will be in a leadership position. How many of you see each other running a company? One, Alexis. Alexis is gonna run a company. Who else, guys? Just one? You want to be, oh, nice. Emilio? Emiliano, sorry. Emiliano. And guys, do you want to be employees? It's also okay to be. But do you see running a department as an employee, like in a C-suite level, a management level? Well, both of you who runs the company or the manager will need these abilities. Okay, guys? You will learn how to create a balance sheet, a cash flow statement. What is a cash flow statement, guys? What's the difference between a profit and loss statement and a cash flow statement?
Is a cash flow statement a balance sheet?
No, the balance sheet is another statement. Okay. I'm just showing you the final product of what you will learn, okay? And you will learn how to do project valuations if you're good enough, guys. I can teach you how to do project valuations. Meaning that even this company that doesn't even have started operations, because they start operations in 2022, but this is the future. How much that project is worth in money? Why would you want to know that part, guys? First of all, how do you finance companies?
You need to know the value of the company.
But how do you finance companies? Like, how do you, if you want to start a company from ground zero, what do you need? Resources, right? You need an investment, right? You need cash. How would you get that cash? You need an investor or somebody who loans you money, right? Both of them will request to you this, what you're watching right now. So let's go to the basics, guys. Let's go to the basics. We need a little refresh. So guys, please remember to me, what is the balance sheet? We will learn what is a balance sheet. What is the balance sheet, guys? The first financial statement.
I think it's the value of the company, like all the numbers that the company has made, and it's with the shade that maybe investors could have an idea whether if they should or shouldn't invest on us.
Yes, I would agree with you. Not in a whole level because you need more information, but on first term, yes. Alexis and Emiliano, one of the rules of the semester is that you will be able to take out your notes in the exam, but only if they are written in blue ink and handwritten. I won't allow iPads. I won't allow any phones. You can take all the notes that you want and you can bring them into the exam, no matter what, as they are handwritten and in blue ink. So the balance sheet is the financial statement that reports a company's asset, liabilities, and shareholders' equity at a specific point in time. Consider that the balance sheet will show all the accounting registers since day one until a certain date that you want. They don't cover, the balance sheet don't cover periods of time. You won't see a balance sheet from the 1st of January until the 31st of December. That's not proper. So guys, now that you know what are the elements of a balance sheet, which is an asset, a liability, and shareholders, let's review the concepts. What is an asset?
The main source.
An, an asset is a resource or right to claim something.
Nice. Assets are resources and the right to claim. Who can give me an example of the right to claim?
A product, a physical product.
No, that's not the right to claim. Translate it. First of all, translate it, Jessica. Abigail.
The papers, like a contract and stuff like that.
Yes, that can be a right to claim. The most common example is a credit sale. If you sell, well, this tajin to somebody, but I sell it to Jessica and tell Jessica, pay me in 30 days. That's a credit sale. But you don't have the money, you don't have the cash. You have the right to claim. So assets are resources and the right to claim. Resources can be cash, okay? And a resource is an inventory also. What are liabilities, guys?
Debts.
Debts, exactly. That's it. Debts. With whom? With who do you owe that debt?
The shareholder.
No. You have a special place for the shareholders. You have in the screen. Shareholders' equity. Liabilities, give me an example of a liability. An example of a debt, guys. The easiest one. A credit card is a debt?
Yes, to the bank.
Exactly. And what is the shareholders' equity?
It's also a debt, but they own the company.
Did everybody hear? Belen? Shareholders' equity are also debts. The only thing is that those are debts to your shareholders. What's the difference between liabilities and shareholders' equity? If both are debts, what's the difference?
There is.
Why the risk?
Because it expect I think it was better results or something.
What happens if you don't pay the credit card? And what happens if you don't have profits in the income statement? Are you obligated to pay something to your shareholders?
Intereses, but I don't remember.
No. If you don't pay the credit card, you are obligated to pay interest, like you said. If you don't pay the credit card. But if you don't pay your shareholders because you didn't have profits for your company, are you obligated to pay your shareholders?
No. Yeah.
No, because they are paid from the profits of the company. If the company doesn't have profits, meaning they have losses, you don't have to pay anything to the investors. That's why the difference between the first debt and the second debt, obviously the first one is that they have different classifications. Obviously, one is a liability and one is a equity. But the difference between both of them is the risk. Who has more risk? The liabilities or the shareholders?
The shareholder, because you don't know if they're gonna pay you.
That's it. And what would I want to be a shareholder rather than a debtor?
You could have much more money.
Exactly. That's the incentive. Exactly. Very good. So in here you have now the recorded definitions, guys. Assets are the right to collect or the right to claim, and are also resources of the firm. Liabilities are debts. That's it. And equity is the people who possess the right for the economic benefits of the firm. If they don't have economic benefits, they won't get paid. Okay. What is the income statement, guys? The income statement. We just saw it, guys. What do you see in an income statement?
The income of the company.
The income. Just the income? Remember, it's income, cost, and expenses. Okay? The income statement is a financial statement that shows the company income and expenditure. It also shows whether a company is making profit or loss for a given period. Guys, this is the most important financial statement because this is how you measure the administration and the operation of a company. Do you think it's important to be profitable? Otherwise, you won't have a business. That's the meaning and the purpose of a business, to be profitable, to create wellness, to create economic benefits.
I have a question, teacher.
Come on. Yes, tell me.
At what point should a business start making income statements? Not just for practicality's sake, even if it's a small business, but
Since
at what
day
point
one.
is it required by the law?
Since day one.
Since day
When you establish a company, you go to a notario and I don't know how to say notario in inglés, pero bueno. You go to a notario, you open a company which costs around $500, and you need 2 persons minimum. You need 2 shareholders. That's why it's called a society, because it needs 2 persons. And since that part, you need to go, you have like 30 days to go to IRS and open the account for that company. They will give you the RFC, which is the register in the IRS. In the US, it's called IEN. And with that IEN and with the open and the registers with the notario, you go to a bank and open the bank accounts. Once you have the bank account, remember what it's the source for the accountant to make all your public records, your accounting records, the bank statement. Remember that? And that's how you create the accountancy. So since when you have to record everything? Since day 1. Okay, are you obligated? Yes, by law. Okay, guys. So let's review
everything that we are looking at here should be done from day 1.
everything. Everything since you have the bank account. You have to go enter to that point, like since you create a company and open accounts, it takes like around 1 month. Okay, but once you open an account, a bank account, you must have an accountant or create your accountancy ledgers. Okay, another question, guys. Let's review the definitions in the income statement, but the most important figure in here, guys, please learn this, is that the income statement, it's just a detailed view of one account from the equity section. In your equity section, you will have an account called profits and losses of the period. We are watching right now the segment, guys. Obviously, as assets, in the asset section, you will have different accounts, different assets. I don't need you to figure it out them all. I just need you to understand how to determine if the accounting transaction or your financial transaction will be an asset for you, an asset, a liability, an equity, income, cost, or expense, those 6 things. I don't need you to learn anything else. The accountancy names, I will teach them to you, but it's not like you need to know them. But in the equity section, we have one account called profit and losses of the period. And the income statement is a detailed view of that account. Because the profit and losses tells you from the balance sheet, tells you as owner of that company, tells you if the company generated profits or losses. But that's not enough information for me as an investor. As an investor, I want to see how much money entered the company and how they spend that money, right? Does that make sense to you? And that's why the profit and loss is the proper statement that the investors use in order to evaluate the management team. So the revenues are the mechanism where incomes enter the company. No, the revenue and income are not the same thing. Okay, well, forget about that. It's the mechanisms where income enters the company. Expenses are the cost of doing business. Example, salaries, expenses, rent. Utilities expense. The income, we will know it more as margin, guys, because I don't want you to get confused. Margins, márgenes. Income means ventas, sales, ventas, okay? Expenses means gastos. Cost means costo. Income in Spanish means margins, márgenes. We will see what is the accounting, the action process of recording financial transactions. This is what you will learn. First of all, we can't run if you don't learn the basics. Based on the criteria of previous questions, the accountancy records must follow guidelines. These guidelines are worldwide known. IFRS guidelines, it's International Financial Reporting Standards. These are guidelines used all around the world. That's why you're learning a topic in English. And the IFRS is the equivalent of knowing English in the finance culture, okay? And like I told you, guys, this is the most important table the whole semester. If you don't learn this table, you will have a very hard semester. You don't have in here the concepts of things. But the concepts you have to learn are 6. What is an asset? What is a liability, equity, income, cost, and expense? Only six concepts. And this is the proper guideline that will tell you how to classify things, okay? You will see it. We will do some exercise with it. So just to finish your knowledge, your general knowledge is assets, guys, as I told you, is the global classification, but you have accounts. I don't need you to know the accounts. Just I need you to learn assets and liabilities, but I'm showing them to you. In the assets, you will have cash, notes receivable, account receivable. In the liabilities, you will have accounts payable, salaries payable. In the stockholders' equity, you will have capital, stock. And this chart of accounts, this is the first thing that an accountancy system will request to you. Please provide to me your chart of accounts. Even the IRS requests this for you. What we will do and start doing is accounting exercises for you to know how to differentiate your financial transactions. Guys, whenever you receive money in the bank, that's an accountancy record. Whenever you pay something outside the bank to anybody, that generates an accounting transaction, okay? That's why the basis to create an accountancy ledger is the bank statement. Until here, are we good, guys? These are the basics, the ground rules. So let's start with some exercises. These are accountancy exercises, guys. I need you to follow me. So I created a new company. Today I deposit of, I missed that part, just that part is, I created a new company and finally got my bank account. Today, I did a deposit of 1,200 into my bank account with the first batch of cash funds in order to provide working capital to my company. Working capital means the resources to operate, okay? So general rules in accountancy, guys, and this is called principio de partida doble. For every debit transaction, you will have a credit in the opposite sign. For every debit, you will have a credit, and for every credit, you will have a debit in the opposite sign. So if we have an accounting record of 100, you will have an accounting record for minus 100. And the sum of both, obviously, will give you 0. The final result of all the transactions should add to 0. If that doesn't is respected, you have something not properly recorded. I don't think you can even are able to do that because accountancy systems won't allow you. Okay, so let's go, guys. The first example, I created a new company and finally got my bank account. Today I deposited $1,200 US. How would you define that record? What I'm teaching you right now is how to do the booking process, the accounting records. This is how all the accountants do it. Obviously in a system, but this is how they do it. So Enrique Aceves is giving to Enrique Company, both these are separated entities. I'm giving $1,200 to my company. How would you record that? From a company perspective, that money, what is it? From this table, how would you classify the money that I'm receiving, guys?
An asset?
Why an asset? Sorry, Abigail.
Because the company is receiving the money.
Yes, but how would you call the money? What is the concept of an asset? A resource, that's it. So I don't mind that you don't know the concept, but it is an asset and the concept or the bank or the account, it's called bank. That's the account name, okay? So banks and resources increase with debits. So if I want to increase the bank balance, I need to debit the bank account. Okay? As and I just teach you, for every debit, we have a credit. Who can figure out what is the credit, guys? What I need you to figure out is what of these 6 concepts or 5 concepts is the credit. Anybody?
Liability.
Very good, Belen. Very good. I like that way of thinking. It's not a liability, but it is a debt. The only difference is that it was a debt to the investor because it's my company. So I'm the investor. Meaning this is a equity transaction, no? Equity. Common stocks. Very good, guys. You just did your first accounting register. So first day of operations, and I did a credit sale for $100. I did a credit sale. I sold this tajin for $100. How would you record that?
If you sold it, it's because the company is making money out of it, right?
Yes.
So it could be an asset.
No. Be careful. Well, maybe, yeah. I'm wrong in this case. First of all, this is a selling process. Remember the selling process, guys? This means sales,
Sale and liability.
or you can call it revenue, sales or revenue. How, remember, different ways of naming it. And revenue and sales, how do they increase, guys? Revenues increase with credits, right?
Are we still on the same, like the
We are in the
same-
question number 2.
So that's revenue.
is it
Is it what?
I thought that because it was sales, it might be a liability.
There are 2 ways people gets confused, guys. Learn this very good and you will nail it. People tend to confuse assets with expenses, okay? And people tend to confuse revenues with liabilities. Okay? Who can remember to me what are the sales? What's the definition of sales? That's why it's so important to have in mind the definitions. What is the definition of sales?
Are the incoming resources?
Is an economic benefit generated by the company, right? And who has the right to claim the economic benefits of the companies?
The shareholder?
The shareholders. So forget about the name of the account, guys. If it's a credit and you have a negative in it, and at the end of the day it results on a negative balance, it means you have a debt. With whom do you have that debt? That's what we have to figure out. The revenues and sales are debts to whom? To your shareholders. Because if you don't have any cost to deduct from this sale, this would be called profit, right? And you have to pay your shareholders the profits of the company. So you owe those 100 to your shareholders. That's why it's on a negative sign for companies, for the companies.
I think I'm confusing myself again. But I thought that shareholders weren't supposed to have the. Oh no, I think I clarified. Okay, so if the shareholders is investing on you as a company and you're selling, you have to give them the part of they have. But if your company is not selling, you don't have to give the shareholder anything.
You don't have to give them anything. But in this case, I don't know if it's you, Jessica, or Abigail, I'm just telling you that the only transaction that the company has is that they sold this Tajín. If the shareholder comes, like myself, I come to the company and I see this profit, I will claim it, right? And that's why for the company right now, it's a debt. Remember, and that's why I put in here a very basic balance sheet and the income statement. Remember that the profits and losses, which are given or provided in the income statement, are part of the equity section in a balance sheet. It's just a detailed view of how this is generated. You will see it in a line in here, but in here, you will see sales, cost, expenses. So right now, the company has managed to do a sale. And that sale right now, this is the balance that we have according to our records, guys. Wait just a second. Yes. But right now we are not balanced. Sorry. Okay. Guys, do you understand right now what I'm meaning? We just did a sale. And as we don't have any cost and expenses, that sale, it's turned to be a profit and loss. And that profit and loss, we owe that to the shareholder. That's a debt with them.
So I
That's
have a
why,
question,
that's why sales have a credit nature.
but I have a question.
Of course, tell me, David.
Okay, if we did a sale, why is a negative value? O sea, a minus 100.
Because negatives turned out to be debts.
Okay, but we did a sale, so where's the debt?
To whom do you owe that sale money? To the shareholder.
Yeah. Why?
So it is a debt for you because you owe that money to the shareholder.
And there's no profit from there?
Right now it's 100% profit.
But it's turned in a debt, right?
And it turns out to be a debt. The only difference is that that debt, rather than being a liability, it's part of your equity because you owe that money to the shareholder.
Yeah.
Obviously, the correct process is that from this debt, you will have to deduct the cost and the expenses, and you only pay the profit. But at the end of the day, that profit, it's a debt for you. To whom? To your shareholder.
Okay, but the let's say cost and expenses, to pay that, the money comes from the same money that I'm about to give the shareholders. So I have to give the rest of the money to them.
Wait, don't run. Don't run, my friend. The important message is that you understand that sales in the accountancy procedure or the booking process are negatives. That's why in the nature of accounts, you will see revenues that increase with credits. The same with the equity. The equity increase with credits and the liabilities increase with credits. First of all, guys, let's match this accountancy register, okay? Because currently we are not balancing. We're missing 100 positive. And if you know, is that it's because we have just a credit, but for every credit, we need a debit. What is the debit of this transaction, guys? First day of operations, and I did a credit sale. This is the sale register, but I'm missing the debit. And this is where Abigail was correct. We're missing the asset. They are not paying me in cash, but we have the right to claim, right? The right to claim, which is an asset called account receivable. And now how much I have in here? My balance sheet, it's balanced. Okay. Until here, guys, are we good?
Yeah.
Okay. From the previous operation where I sold $100 to be paid in the future, as it was a credit operation, the cost of the operation is $50 to be paid in the future. My accountant registered. Let's figure out, guys. I paid for this tajin. I sold it at $100, but buying it costed to me $50. How would I register that? From these guys, where you should classify that part? Let me help you a little bit. Cost, which is all an expense. It increases with debit. And if I didn't pay it, the cost of the operation is $50 to be paid in the future, meaning that I didn't pay it. So I have a debt, and debts are
Liabilities.
obviously negative. Just give me 1 second, guys. Cost expense. That's correct. Account receivable. Okay, and here it's wrong. Yes. That's it. And this is how it's getting fed the balance sheet. As you're watching, you're doing the booking process, and the booking process feeds the income statement and the balance sheet. Question number 4, guys. Before we leave, today I received a wire transfer of $100 from my customer, and I took $50 and paid the vendor also via wire transfer. My accountant registered. Who can help me with that? If I received a wire transfer to my bank account, what do I have?
An asset of $100.
Awesome, nice. And let me help you with this one because it's not that easy. Guys, this is a thing of reclassification of an asset because you don't have a debt. Somebody is paying you. remember that you had an account receivable, which is the right to claim. You modify that right to claim to change it for a resource. Nobody owes me anymore because my customer or this account payable already paid me. But I converted this right to claim into cash. You will get used to with these transactions. But at the end, guys, as I'm typing, you only need to figure out if it's an asset, cost, liability, or equity. Okay? Don't need to learn the account names. I bought a laptop. This is the easiest one. Come on, guys. I bought a laptop for my firm in cash for $1,000. My accountant registered.
If you owe money, then it's a debt, right?
Wait. In here, this is you paid in cash.
I've already paid for it.
I bought a laptop for my firm in cash.
It's an asset for my friend.
Yes, nice. It is an asset. It's a resource. Laptop. And where did you take the money to pay it from? Where did you took that resource from in order to pay the laptop? From the bank, no? In this transaction, we missed a part, guys. It's today I received a wire transfer for $100 from my customer. And it says, I took $50 to pay what I owed, to pay my debt. Who can tell me that register, guys?
If it's a debt, it can be a.
But be careful, be careful. You are paying that debt. And if you remember, somebody lent you money before. So what we have to do is to pay that debt. We will pay that debt. Where that money it's coming from the bank. You are decreasing the resource from the bank in order to pay the debt. And this is how your accountancy records are created, guys. We will keep training these records until you figure it out. Don't worry if you didn't understand properly this time. You will get it. On average, you will get it on a month. Maybe if you're very good, as some of you are already, maybe less time. But have a little patience, okay, guys? This is why I don't like to teach, but these are the basics. We will start running once you figure out this. Once you figure out this out, okay, guys? So thank you very much. Don't forget next time on the classroom. And thank you very much. See you soon, guys. Remember that these videos are recorded and pasted into YouTube. So you have my YouTube channel on Brightspace. Add me up so you can see your videos, and I will upload it today. So thank you very much, guys, and see you on Thursday.
What part of Brightspace can we find the YouTube channel?
In the welcome folder.
Okay, thank you.
Thank you very much, guys. See you on Thursday.
You too.
Bye-bye.